Welcome back, everyone. Next up, we have Artificial Intelligence Technology Solutions, Inc. Trades on the OTC Pink sheets under the symbol AITX and is an innovator in the delivery of artificial intelligence-based solutions that empower organizations to gain new insight, solve complex challenges, and fuel new business ideas. Please welcome its president and CEO, Steve Reinharz. Welcome, Steve.
Thanks, Anna. Great to be here.
All right, we look forward to your presentation. Take it away.
Thank you so much. The name of our company is Artificial Intelligence Technology Solutions. We trade currently on the OTC Pinks under the ticker AITX. And we like to say that we're autonomous, secure, and most of all, inevitable. We're going to go through some key reasons on why we believe that we're creating a brand new industry, why we believe we're going to be the incumbent in the space, and how we're going to do that. So I encourage you to follow us on social platforms, on YouTube, follow my Twitter, because we're always sharing a lot of information. We're very connected to our retail investors, and it's a brave new world that we're helping folks get used to. So let's talk a little bit about what we're doing. Our core business, because there are a few businesses, has to do with bringing some evolution to the security and facilities businesses. Today, these businesses roughly are about $25 billion each for a combined value of $50 billion. But there are some significant structural challenges in those industries that cannot be solved with existing solutions. What we've done, and this brings us back to that new industry that I believe we've created, is create a variety of solutions under the banner autonomous remote services. We're going to talk about what that really means, what that does, and why is it so important. So we know that there's about $50 billion of combined spend in these industries right now. But what we also know through other sources is that filling the jobs that are required in these two industries is very difficult right now. And there's four main reasons why it's difficult. The first is even before the pandemic started, we had historically low unemployment numbers. And that was already causing a strain on fulfilling existing needs for security and facilities jobs. Combine that with a couple outcomes from the pandemic, specifically two outcomes. The first one is older workers not returning to work, 1.5 million workers not going back because they realized they don't want to and they can survive just fine with however else they're making income. That's been a big reduction of available staff for these industries. The second pandemic-related function is that younger workers that would typically start to enter the workforce through some of these entry-level jobs don't want these jobs. Not only do we see it in security and facilities, we see it in other areas like fast food, delivery, logistics, other things that affect our day-to-day lives. So these are three significant issues. From a longer-term view, we have to consider the fact that we're in population decline. There is no miracle of 5 million workers waiting around the corner to take these jobs. That's why we feel so strongly that what we're doing is not only significantly helping businesses reduce cost and improve performance, but in fact, we're performing a role that robots have to fulfill in order for society to continue functioning normally. I know it's a big statement, but the math adds up that way. We must have artificially intelligent robots performing some of these projects, some of these jobs going forward. The humans don't exist to do these jobs, so we have no choice. That's one of the things that drives us as a company, is this mission that we feel that we're on. Like I said, a lot of labor source shortages. I kind of hit those items really quick. And there's a lot of supporting material out there beyond what you just heard me talk about. But some of the problems that we need to fix have to do with theft, trespassing, you know, vagrancy, loitering, and just staffing basic jobs. So what we're doing, in addition to providing robotic staff for these jobs, is our staff that we're providing, in many cases, do the jobs better and at a significantly lower price than a human counterpart would. And as companies are always in the business of reducing cost and gaining efficiency, we again fulfill a very important sweet spot in their strategic plans. Now, how are we doing that? We're doing it with 3 companies. The public company is Artificial Intelligence Technology Solutions. Easy to remember, AITX. The 3 operating subsidiaries are robotic assistance devices that we call RAD, a second subsidiary called RAD-G, and a third called RAD-M. RAD Inc. is the company that has these fantastic products, has the channel agreements on bringing products to channel, and has a direct sales force as well to sell direct to end users. Over the course of the past several months, we've increased our sales force to 7 plus a senior sales vice president. And those 7 are really starting to hit the ground running this year. And I expect that we will have a fairly significant multiple of revenues, particularly our recurring monthly revenue at the end of this fiscal year. So it's very exciting. RAD-G produces the technology that runs RAD Inc. And it's a significant item because we plan on allowing other OEMs to use our technology to create their own devices that run on our network. This is, of course, because we want to be the overwhelming incumbent in this space. And as such, we want to make sure that other folks can build on what we've started. The last company is Robotic Assistance Devices Mobile. This is the company that produces our Romeo product that you can see on screen here. But it's also the company that's working on our robotic dog, which is done in partnership with Ghost Robotics, which is a competitor to Boston Dynamics. And it's also building our delivery robot. The delivery robot is built on the same chassis and with the same technology as Romeo. So it's relatively easy to bring to market because we already have that technology developed. Those are the 3 companies and kind of at a surface of what they do. Each one of them has tremendous potential to bring incredible savings and performance to the industries that we're targeting. I believe each one of these businesses should be $1 billion plus industry at some point. But there's more. And very specifically, with our technology, we're creating new and innovative solutions. One of them is called Rad Light My Way. I'm going to show a video here. Rad Light My Way is something.
Good evening, Claudia. We trust that you've made it to your vehicle okay. Please let us know if there's anything that you need. Have a nice evening.
Well, folks, that is Rad Light My Way, a solution that is completely unique. We love that solution. We're directing some significant sales and marketing efforts to bring that solution to higher education, corporate campuses, and commercial areas, because we think it's going to make a big difference in people's individual and personal security. So with AITX, we're building solutions to help fill the labor gap, to save organizations money, to improve the performance of security and safety, and we're doing it with new and innovative hardware and software solutions. Thank you very much for listening. We encourage you to follow us. Thank you.
All right, great presentation. Thank you, Steve. Let's get into some questions. All right, so Anita Barnett asks, well, first of all, she congratulates you on your new dealer and asks, what do you think Secure Corp will do to your top line on a percentage basis?
Anita, thanks very much for the question. You know, we have a few different things happening in Canada, and Montreal, is my birth city and probably my favorite city in North America. So I'm so excited to have some business purposes to go there. I think that that particular client, if they fulfill what their expectations are in terms of bringing Avas and Roses and Scotts to approximately 30 or 35 locations around Canada, I think that it could make a decent impact in this coming fiscal year's financials. That said, because we have dozens of similar opportunities or even larger opportunities in the sales funnel that I expect and hope to close and implement over the course of the following fiscal year, the impact of that particular sale would probably be, not as significant just because we've got so many other things happening as well. Thank you.
Makes sense. Bob Clark asks, when it comes to getting new talent into your company, are you having trouble finding qualified prospects?
We're not having trouble per se, but thinking about the question for a little bit longer, I will say that there's different types of team members that we're hiring. So we're hiring everything from, artificial intelligence, perception software developers to autonomy software developers to mechatronics engineers, electrical engineers, electronics engineers. And those are roles that I'm pretty involved in terms of recruiting. And although the hiring is slow, I think it's more because we're very difficult to join in terms of all the hoops you have to jump through and tests that we make you do if you're programming or a designer. And then all the interviews you have to do. We're very careful and selective with who we bring on board. So it's a slow process. I do know that we have been building a very positive reputation among the engineering and software development communities. And as our profile continues to increase, it continues to be a little bit easier to recruit. Our Detroit team, out of what we call our REX, which is our RAD Excellence Center, where we build these products, has been built on almost entirely on word of mouth through happy and amazing team members that are recruiting previous members who they think would be a good fit from their previous employers. So we're doing okay. We're doing okay. Thank you for asking.
Irene Thornton wants to know how you develop your technology, and can you talk about your R&D and the process, talk about your team?
We have over half of our employees are in the research and development department. So out of the 77 employees, I want to say about 40 or 42 roughly are some type of developer or engineer. Most of our development and engineering is done across the Detroit River in southeastern Ontario, as well as some other Canadian cities. And really, it has to do with, like I said in the presentation, with the autonomous remote services industry. If you go onto the website AITX.ai, you can download something that we call the Autonomous Remote Services Manifesto. And in that paper, it really lays out how we see industry evolving, how we see the need for these solutions, why we've created these solutions. So when it comes to having to create solutions, really the playbook is already there, and we're just executing the plays. I encourage you to read it. I think we have about 5,000 unique downloads of that paper, which in terms of what we do, which is quite a significant number. So we're really getting some traction there. Thank you.
Pete Sherman wants to know what percentage of your business is hardware versus software?
Well, it's all combined. So we're really a SaaS model company. We build the devices because they carry the software. And so that's why that middle company, RAD-G, is producing hardware for other OEMs so that other folks can also do it. We're most interested in recurring monthly revenue. So we amortize the capital cost and recoup it over a period of months. In the first year, we have very high profitability, very high gross margin because of that SaaS model.
Philip Beck wants to know if you're in talks with any hospitality brands or security companies about co-branding your products.
We are. We have a very large channel of almost 30 security companies across North America, that most of which can only exclusively carry us to market. And in many cases, we brand our devices in their colors for their customers as well. There is a larger relationship that we announced, I think, at the beginning of January or the end of December, which is more of a full OEM relationship with a large multi-billion-dollar North American communications company. And you have to stay tuned to see who that is and how that's going to evolve.
Joe M. wants you to talk about your burn rate and what you're doing to support it. And on the same note, do you give any guidance?
The guidance that I'll give is that I expect our monthly recurring revenue number, which is the key number that I watch, because that's the number that will be most highly valued, to be between 5 and 15 times at the end of fiscal 23 as it will be at the end of fiscal 22. So that's the key range that I'm working towards in terms of recurring monthly revenue guidance. Certainly, there'll be a variety of fixed sales in that period of time. It's less accurate to predict and, again, somewhat less interesting. Although it might pump up the top number, it's not the number that's going to get us the highest valuation, so it's secondary to me. And I'm sorry, Anna, what was the first part of that question?
The first part is talk about your burn rate, how you're supporting it. He also has a follow-up question about when you realistically expect to go cash flow positive.
Thank you very much. Okay, so certainly we're cash flow negative, as you can see. When do we expect to go cash flow positive? Not this fiscal year and potentially not next fiscal year. The way that we're looking at this industry that we believe we're creating is sort of, and forgive me for any presumptuousness with this, sort of how Amazon did, where they ran for years and years in negative cash flow in order to build and control that industry. I certainly am following some of that playbook because I want our devices to be everywhere. I want us to have the best technology. I want to have the lowest cost due to economies of scale. I want to have the best engineering team. And in order to do that, the focus has to be on growth and continuous investment into the company, as opposed to a more short-term growth of turning a profit per se. So I want to be very clear on that with potential investors. I don't necessarily think that it will negatively impact the stock price. Certainly, we've seen other companies follow this playbook and have a continuously rising price and give investors great returns.
Travis Marshall wants to know if you outsource R&D to other countries or any other companies, and do you have any national or international joint ventures?
We have an international dealer out of Romania, a company called Civitas. Fantastic people. They are dealing with some large European manufacturers that do, core manufacturing in Eastern Europe and Romania and some of the surrounding countries. We're very excited about that partnership. So that is, from what we do, an international partnership standpoint. Kind of Canada and US, we kind of look at through one lens. Since I am a Canadian and an American at the same time, for me, it's kind of a borderless thing. So lots of operations on both sides of the border. But again, I just kind of consider them as one larger entity. We have an office in Sri Lanka with 6 or 7 employees that do electronics engineering for RAD-G. And then we have some scattered employees in other parts of Europe that might do some graphics or miscellaneous tasks from time to time to supplement our core employees.
Dror Tepper wants to know how you would compare your technology to the marketplace.
Well, Dror, I would say that our technology is superior than anything else on the market. I would say that anybody else on the market is already in a position of following us. And I would say that we probably have a 2 to 3 year technology and industry lead on any wannabe competitors. Those are my opinions. We work very hard to maintain that by spending our money on research and development, building a strong customer base, building a strong internal team, and building strong relationships with our retail investors.
And Clinton B wants to know if you can talk about any convertible notes you have and if you plan to increase these or go to equity for future funding.
At this moment, except for some really old convertible notes that I inherited when I took over the public company that I renamed into AITX, I am so pleased to say that we have no other convertible notes whatsoever. And at this point, I don't plan on taking any because we have an active S3 out there, which gets us, again, the equity line that you referred to at the least possible cost to investors. Of course, with an S3, well, let me rephrase, with the S3s that I negotiate with the institutional investors, we're selling shares to the institutional investors at a very slight discount to market. I'm sure that our institutional investors would share with you that I'm very difficult to negotiate with, and I fight for the best deals possible because I understand its impact on retail.
Thank you for that. John Moog asks how many employees are planned to be added in the next fiscal year and what discipline is forecasted to be the most?
Well, like I said, I think we're sitting around 77 plus or minus right now. I know we've got 22 open requisitions. All of those open recs are in the engineering and software developer categories right now. They're all of the research and development part of the business. We're definitely always on the lookout for great salespeople and business development managers. So although there might not be an open rec number for them, right person comes along, they got the right attitude, we're going to snap them up. The production folks out of the recs in Detroit will definitely need to add people throughout the course of this year, maybe 5 to 10, depending on demand. So kind of at a maximum, I would say if everything was maxed out, maybe we finish this fiscal year or this coming fiscal year, which starts March 1st, maybe we finish it with 110 employees or team members at that point is probably a realistic expectation. Again, although I want to continuously invest in the team and grow the team and have the best team, I do have an eye towards how quickly overhead and SG&A grow versus how quickly revenues grow.
Last question for you, Steve, from Herman. Is your monthly recurring revenue on a subscription basis? Are people locked in? Discuss the terms, please. Generally
speaking, the minimum term for a subscription is 12 months. There's discounts available if customers will sign up for more than 12 months at a time. Our attrition, I believe, is less than 5%. So after 12 months, a customer gets offered to renew for 12 months at a discount or go month to month. And again, very, very few customers are lost at this point.
All right. Well, Steve, we really appreciate your time and presentation with us today. Please join us again in the future and give us some updates.
I hope to, Hannah. Thank you for your time.
All right. Okay, everyone, stay with us. We're going to transition to our next presenter. We'll be right back.